Astera Labs, just tumbled 12% on July 10, 2026, sending a ripple through the tech-heavy NASDAQ 100. If you're scrolling through your ticker feed now, you'll see the red arrow pointing straight at Lab. It's not just a one-off glitch. The drop came after a 10% plunge on June 24 following the company's debut in the index, and the latest dip echoes a broader tech sector wobble. For investors who missed the initial surge, this spike creates a fresh buying window. But why should you care? Let's unpack the numbers, the catalysts, and what the market is signaling right now. Even seasoned traders noted the sharp drop on chart timeframes, hinting at volatility ahead. Astera Labs, listed under ticker LAB, joined the NASDAQ 100 on June 24, 2026, a move that initially lifted the stock 10% before a sudden pullback. The company's core product, high-speed, silicon-based data center interconnects, has attracted attention from cloud giants like Amazon and Microsoft, yet supply chain constraints have kept growth moderate. In the past 48 hours, the firm released a revised earnings outlook, projecting a 5% revenue increase for Q3 2026, down from the 12% surge previously forecast. Analysts at TIKR now give a 12-month target of £9.50, a 20% upside from today's price of £7.53, while noting that any further supply chain hiccups could temper that rally. The company announced a partnership with a manufacturer. Since the 12% plunge, Lab's market cap slipped from £12.8 billion to roughly £11.5 billion, a 10% erosion that rattled sector ETFs such as the Invesco NASDAQ 100 UCITS ETF. Retail traders on platforms like Robinhood reported a 38 schema surge in short interest, signaling a short covering frenzy that could brief the price back into the mid-pound 8 range. On the supply side, Astera's key silicon partners, including TSMC, confirmed a production delay, causing a 3-day lag in new board shipments. Meanwhile, cloud service providers have paused capital expenditure on new interconnects, tightening demand forecasts for the next quarter. Investors are now comparing Lab's price action to its peers like Marvell and Broadcom, noting a sharper volatility curve. Analysts predict that Lab will stabilize around £8.50 to £9 in the next 60 days if the silicon bottleneck eases. Ticker's consensus upgrade to a buy hinges on a 12-month target of £9.50, implying a 30% upside. A modest earnings beat next week could trigger a rally, but a further supply chain setback would force the stock back. We expect short-term volatility to stay high, with a 20% range-bound swing typical of tech plays post-earnings. Over the medium term, as cloud data center demand recovers, Lab's market share could climb from 4.2% to 5.8% of the interconnect market, supporting a gradual top-line growth of 8 to 10% annually. The company's product launch in September is expected to lift demand. On a day when markets are bracing for volatility, Lab's 12% drop is more than a headline, it's a signal. The company's recent earnings revision, silicon supply hiccups and a shifting cloud market backdrop create a complex risk-reward mix. Yet, with a clear 12-month target of £9.50 and projected 8 to 10% top-line growth, seasoned investors may see Lab as a tactical near-term play. If you're looking to diversify a tech portfolio, a disciplined entry at today's £7.53 could offer a 20% upside. Remember, timing is critical, so watch supply chain updates and the next earnings report on July 23, 2026. The company's CEO has highlighted an aggressive roadmap, suggesting future product launches could further boost revenue for next year.